You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, Jonathan Rose, and welcome to Masters in Trading Live at Masters in Trading Live. I get on here every day the market's open, 11 o'clock Eastern, go over the market, share some thoughts, and once in a while we'll even share our trade of the day. What's going on today, guys? Market strong. VIX volatility measures are selling off a little bit, but market's pretty much strong. It's kind of confusing me a little bit because volatility measures, especially 30 days out, are staying a little bit bid going into the election. But overall, use common sense. What's going on? The market is strong. And since our talk yesterday, the VIX and volatility measures have come lower. That's why the market's gone higher. So today we're going to talk about 4 topics. I got bonds, talk about volatility a little bit. We had a wing dinger of a lithium trade, and there was a 6.7 billion cash buyout that we were able to take advantage of. So let's go over to the screen share. Excited to go over this one. Okay, we're going to start here because this is bonds. And we're talking about bonds. I'm talking about ZB, which is also the exact same thing as TLT. TLT is widely traded. TLT, here's what it looks like. TLT is a 20-year bond, and ZB is a basket of 20-year bonds. So right here, these are implied volatility bands. And these implied volatility bands each month start over. So at the beginning of October, we started right here. At the beginning of September, we start right here. So every single month, we start again because we're looking at each month as a cycle. When these blue bands spike, volatility is spiking in bonds. So here, volatility is greater in October than it was in September. Okay, no big deal. But if we look at the behavior every single month going back to June, bonds open, they trade up to their expected move, and they sell off. They sell up to their implied volatility bands. Here, they trade up, don't really get there, and sell off. The next month, open again, implied volatility bands. Why can't it get through this? Well, hedging. Option traders need to hedge around implied volatility levels. Well, what's going on right now for the first month is bond prices are selling off. Bond prices are selling off. Yields are going higher. If we look at some more bonds ZB is going to be the light blue. The 10-year future, which is actually closer to like a 7-year bond, and the 5-year future actually closer to a 4-year bond. These are the different volatility levels. 10-year has got the lowest volatility. 5-year has got the second lowest, and ZB has got the highest out of these 3 because it's the most volatile. I wouldn't be surprised to see bond prices rally and yields start to drop, specifically in that TLT. So I'm not going to share an official trade, but I would bet that bonds are going to go higher in price, lower in yield before otherwise. Here's a really special trade that we were able to take advantage of. I shared this 2 days ago. Guys, entry Arcadium Lithium, ALTM. Set a limit order to buy to open the ALTM January 17th 4.5 strike calls for 40 cents or better. We shared this trade, but 2 days ago, yesterday or last night, it was announced that Rio Tinto will acquire Arcadium Lithium. The reason we got into this trade is because there was rumors that Rio would buy Arcadium Lithium, the rumors that they would buy it for between $6 and $7 billion, the reason I shared this trade with my community is because Arcadium Lithium was trading at $4.5 billion market cap just 2 days ago when the rumor was already in that they were going to buy between $6 and $7 billion. That's why we got into the trade. Here is us getting into the trade. Guys, you can buy it for 40 cents or better. That's $40 per option contract. If you buy 10 of them, that's $400. 40 cents for 10 of them. 2 days later, we're taking this off for $1.10 or better. So traders are able to buy for $400. 2 days later, sell for $1,100. Congrats to all of my traders that were able to take advantage of this fantastic trade. Who are you? Dimitri. He got out for $1.10. Scrappy was able to get out for $1.10. Bassaholic got out for $1.10. Denny, where'd you get out? Patiently waiting for $1.40. Don here, $1.10. Boom. John here, $1.09. Excellent, excellent, excellent trade. There was a question in Discord, what happens if you hold this position until the deal is done? In order to get the answer for that, you need to read the actual deal. The deal is Rio is going to gobble up ALTM for all cash. My guess is that you will settle in cash or you'll end up getting shares of Rio, but I would strongly, strongly, strongly recommend locking in your 150% profit and moving on with your day. Lithium. We shared trades in lithium on Tuesday. Now I want to ask everybody in my community, because this is a phenomenal area to build your memory bank. Why? Why did we share trades in lithium? That's what we're going to leave. That's what I'm going to discuss with my community now, because that's when you have to build your memory bank. Because the trade that we shared in lithium, it wasn't because I woke up and I'm like, I think lithium's going to gap higher. Let's just buy lithium. No, there's a very, very specific reason why we turned around and bought lithium. That's the lesson that I want to drill into my community. Thanks everybody for watching. We'll be live on here tomorrow, 11 o'clock Eastern time. Okay, this video